Assalamualaikum and a very good day to Dr. Joanny and my friends. My name is M.Razismail representing Group 06. Today we will present our entrepreneurial finance assignment on Wellspire Berhad, a company listed on the SE market of Bursa Malaysia. Our presentation covers 5 sessions: company background, venture capital investing, IPO harvesting strategy, financial distress, turnaround analysis, and finally our investment recommendations. For company background, Wellspire Berhad is an investment holding company based in Kuala Lumpur, focusing on the distribution and online retailing of packaged snacks foods. Its products are sold mainly in Thailand, Malaysia, and Singapore, with Thailand being its largest market. For FY 2025, the company recorded revenue of approximately 159 million and had a market capitalization of around 4 to 7 million. Wellspire is currently in the growth stage, expanding its market presence and business activities. Next, for key milestone timeline, the company journey began in 2007 through its subsidiary Bali Enterprise in Thailand. A key milestone occurred in 2013 when it became the exclusive distributor of Cha sunflower seed in Thailand, which remains its main revenue resources. In 2020, the company expanded into e-commerce, and in 2023, it was successfully listed on the SE market of Bursa Malaysia. Most recently, the Cha distribution agreement was renewed until 2027, and the company acquired Tian and Trading in 2025 to support further growth. With that, I will hand over to Alia for the financial review.
Thank you, Rajesh. My name is Alia, and I will briefly present Wellspire's financial performance. As shown in the charts, revenue declined from 136.71 million in financial year 2021 to 123.37 million in financial year 2022, but then recovered steadily to 159.09 million in financial year 2025. Net income also dropped significantly in financial year 2022 due to high costs and listing expenses. However, it improved strongly in financial year 2023 and financial year 2024 before moderating slightly to 5.19 million in financial year 2025 as the company expanded its operation. Overall, Wellspire has shown steady revenue growth and maintained profitability, reflecting in a resilient business with good growth potential. Now, I will pass to Nurin.
Thank you, Alia. I am Putri and I will now present our due diligence assessment and investment decision for Wellspire. Firstly, on financial, Wellspire achieved 24% revenue, CAGR margins at 8%, positive cash flow and a healthier debt ratio. Secondly, regarding business model, it benefits from exclusive Cha distribution rights as satellite to logistics and digital forecasting system. Moreover, in terms of market potential, Asian region demand, scalable expansion into Malaysia and Singapore, and strong retail partnership highlight growth opportunities. However, the risk profile shows dependency on key FX fluctuation and geographic concentration. Still, mitigation through hedging, expansion, and diversification reduce this risk. Therefore, our decision is clear, and yes, we will invest. We will propose 4 million and 8% of our 50 million fund and the pre-IPO stage. The instrument is RCPS, offering downside protection and IPO formation upside. Furthermore, we target a 3 until 5% equity stake with valuation at 92 million. Key conditions include a board observer seat, quarterly reporting, a 6-month lockout, and anti-dilution protection. Finally, our exit strategy is via SE market within 12 until 18 months post-IPO, aiming for a 3 until 5 times return, supported by share price performance.
Next is harvesting strategy, which is IPO background. Wellspire's main harvesting strategy was its IPO and Bursa Malaysia's ACE market. The IPO gave early investors an exit while raising fresh capital for growth. Key facts: listed on 16 January 2023 under code WELS, which is 0271. Issue price 0.23 cent shares with 1249.2 million shares issued. Raised 28.66 million in gross proceeds. Market cap at listing 163.79 million. Oversubscription is 11.24 times overall, with non-Bumiputra Trans oversubscribed 16.43 times, showing strong investor confidence. Fund allocation 16 million, which is 55.8% is warehouse and operations in Thailand. 5.96 million, which is 20.8% is working capital. 6.70 million, which is 23.4%, is listing expenses. Next, post-IPO market performance. First day trading opened at 33 cents, a 43.5% premium. Within 1 month, price rose to 50 cents, which is 117%. Peak in August 2023, 975 cents, which is increased to 324%, and market cap is 694 million. As of May 2026, price stabilized at 60 cents, which is 160% from IPO. Conclusion: IPO was a highly effective harvesting mechanism, which is delivering liquidity and expansion.
For the financial districts analysis, we evaluate Wellspire profitability, liquidity, and solvency. In terms of profitability, revenue remains stable at around 124 million, while profit before tax and profit after tax increased, showing improvement efficiency. For liquidity, the company shows strong improvement after the IPO, with cash reserve increasing from 10 million to 41 million, supported by positive operating cash flow. For solvency, total assets increased significantly, while liability decreased and liquidity nearly double due to IPO proceeds and retained earnings. Overall, Wellspire holding Berhad is not financially distressed. The company has a strong financial position, low debt level, and healthy cash flow. Our preventive strategy includes expanding into new markets, diversifying product, and strengthening e-commerce channel to maintain long-term growth. However, we must consider several future risks. The higher risk is the exclusive agreement with Chacha Group, as termination could significantly affect revenue. To reduce this dependency, the company should develop its own brand. Foreign exchange risk between Thai baht and ringgit Malaysia can be managed through FX hedging strategies such as forward contracts. Geographic and customer concentration risk can be reduced by expanding into Malaysia, Singapore, and starting e-commerce channel. Other preventive strategies include maintaining sufficient stock level to manage supply chain issue and improving efficiency through technology and cost control. Based on our overall analysis of Wellspire financial performance business model, IPO performance, and future growth perspective, our recommendation is buy. This recommendation is supported by several reasons. First, Wellspire has shown consistent revenue growth, increasing from 123 million in financial year 2022 to 159 million in 2025, representing around 29% growth. Although net profit deadline is in financial year 2025 is due to expansion and operating costs, the company remains profitable, showing that its core business remains strong. Second, the company has a strong financial position with healthy cash flow, low debt dependency, and a stronger equity base after the IPO. Our financial distress analysis also confirmed that Wellspire is not facing major liquidity or solvency issues. Third, the company achieved strong post-IPO performance. The IPO was oversubscribed more than 11 times, and the share price increasing significantly above the IPO price, showing stronger investor confidence. Fourth, Wellspire has competitive advantage through its exclusive Chacha distribution in Thailand and strong relationship with major retail partners such as 7-Eleven, Lotus, Big C, and Metro. Finally, the company has strong future growth opportunity through Asian expansion, e-commerce development, strategic acquisition, and biomass fuel trading. However, some risks remain, including dependency of Chacha product customer concentration, geographic concentration in Thailand, foreign exchange fluctuation, and competition pressure in FMCG industry. Despite this, risk management has already taken steps to reduce dependency and diversify the business. Therefore, from a post-IPO investment perspective, we believe Wellspire growth possibility outweigh its current risk, and we recommend buy to investor with a medium to long-term investment horizon. Thank you.